It is December 17th, JLD here, and welcome to MSTR Today in the Treasury Titans. Thank you so much, everybody, for your birthday wishes yesterday. Hundreds of comments wishing me a happy birthday. So thank you for that. And remember, nothing in this video is financial advice. Please do your own research, but please, let's help Michael Saylor fight those bears. And here's Michael Saylor fighting the bears, doing what he can to help the cause of Bitcoin, to help the cause of strategy, and all MSTR shareholders. He is fighting for us. We have a great post from Michael Saylor, who just, he's quick. He likes to come back quickly and with very sharp, concise, and just distinct answers. The Bitcoin quantum leap, because a lot of people are fighting over that now. Quantum's going to come and take all of Bitcoin's money. It's going to make Bitcoin irrelevant. It's going to break all the codes. It's going to get all the seed phrases. Quantum computing won't break Bitcoin. It will harden it. The network upgrades, active coins migrate, lost coins stay frozen, security goes up, supply comes down, Bitcoin grows stronger. Now, who do you think is probably more likely to be correct? Some 1,700 follower, most of those bots, ex-poster who's just out there just spreading FUD because they're hoping for one more follower, one more comment, one more hearts, or Michael Saylor, somebody who has done nothing except study Bitcoin for 5.5 years now, dedicated all of his mind, his resources, his brain power to Bitcoin, written books, done all the things. I'm putting my money on Michael Saylor, and I think you should probably too. Here we go with Jeff Walton, who says, digital money is an application for digital credit. What's better collateral than Bitcoin? 4x over collateralized, zero volatility, pure yield. If digital credit is the iPhone moment, it's a jump ball to make the first apps. Billions of dollars will be made with a multitude of business models that can be created using flavors of the slide outlined below. 10 years from now, it will have been obvious. And this is, of course, from Michael Saylor's Bitcoin Mania speech, where he talked about digital money can be constructed with digital credit, specifically Stretch. So what is digital money features? Well, one, stable NAV, like essentially a 0% vol. And that's what Michael Saylor is going for. He's going for like 99.9 to 100.1. Like that's kind of the volatility he's looking for Stretch. 100% backed, around an 8% yield. Of course, right now Stretch is at 10.75, going to be 11 in about 15 days. Infinity Sharpe ratio, and then 5 reputable regulated issuer. So a great reputation, reputable regulated issuer. If Stretch trades below 100 par, the issuer can draw down from the reserve to maintain stable NAV and 100 backing. This is the future. And again, 10 years from now, it'll seem so obvious. The Bitcoin therapist says, the question you need to ask yourself is, how long is Wall Street willing to let Michael Saylor buy 10,000 Bitcoin a week? Because guess what? Michael Saylor knows something. With the cash reserve Saylor has, no reason to defend the MNAV. They will sell $1 billion a week in MSTR until less than 1 MNAV, or until Bitcoin rips. Then they'll sell more. At this rate, strategy will have nearly 700,000 Bitcoin by end of the year and 750,000 by the end of January. And by the way, over 1 million by the end of 2026. Bitcoin has to move at some point, and it's going to be incredibly violent. This is a year in the making. I expect a lot of volatility and blood in the streets for bears, as Michael Saylor just keeps on buying. Bitcoin Magazine. Justin, Michael Saylor Strategy now owns 3.2% of all Bitcoin ever to be in existence. And what happens? This number just keeps going up and up and up. Thank you, strategy. James Van Straten, just to understand the magnitude of spot sell pressure, in the past week, long-term holders have divested over 137,000 Bitcoin. That's insane. This is an absolute record selling of long-term holders. They have decided that they believe in the 4-year cycle, by the way, which is fine. They've been around forever. They are just disciples of the 4-year cycle. And by the way, I'm not saying all of them. There are some of them that probably see that we're entering a super cycle. But there's a lot of the OGs, a lot of the long-term holders that, number one, believe in the 4-year cycle, so they want to cash out. But also, number two, hey, even if they don't believe in the 4-year cycle, maybe they just want to take some lifestyle chips off the table, around 100,000 Bitcoin. And that's okay too. So go ahead, buy your yachts, buy your islands, sell your Bitcoin. Hugh says, Name one company that has a realistic prospect of acquiring 1 million Bitcoin for its balance sheet. I can only think of one, and it's already 67% of the way there, and that is Strategy. It is the only one. Jeff says, Bitcoin higher, increased credit quality. So here we go. Bitcoin higher is greater than increased credit quality is greater than Bitcoin rating is greater than more demand for digital credit is greater than issuance for more digital credit is greater than more Bitcoin buys is greater than Bitcoin higher is greater than more confusion about MSTR valuation is greater than multiple expands is greater than ATM plus BTC higher. Positive reflexive feedback loop we've yet to witness. But guess what? It's loading, it's coiling, it's going to happen. And Brian says, there is so much positive deployment in Bitcoin despite its price action. And this is a post from Steven Levera. The Bitcoin Fear and Greed Index is at 11, levels typical of a cycle low. Nevertheless, there is a lot of good recent news. Number one, Vanguard, an $11 trillion giant reverse course, letting 50 million plus clients trade Bitcoin ETFs. Bank of America advisors recommending 1 to 4% allocation to Bitcoin. Revolut plus Trust Wallet partnership permitting buying directly to self-custody. MetaMask adds Bitcoin support to its 30 million plus monthly users. Trump said he will review the Samurai case. Hopefully he will pardon the Samurai guys. Block turning on massive merchant adoption up to 4 million in the USA. Large institutions are coming to the party. Example, the Czech Central Bank. And even nation-state wealth funds are buying Bitcoin, even during this dip. Larry Fink mentioned this publicly. New L2s for Bitcoin showing promise and dev builder excitement. ARC, Spark, renewed interest in Liquid. There's so much going on. And the Bitcoin Therapist says, just in, a new report from $6 trillion asset manager Fidelity says Bitcoin's 4-year cycle may finally be over and Bitcoin could be entering a decade-long super cycle. Fidelity is personally where I bank. It's where I do all of my trading. They've been great to me for decades. They've always been ahead and right on just their finger on the pulse when it comes to Bitcoin and the entire crypto verse. So I love what they have to say as well. And I hope you're going to love what Michael Saylor has to say because he is dropping value bombs. So sit back, relax, and enjoy.
And then extract the yield. Pay you 10% dividend yield forever. Now, Bitcoin's going up 45% for the past 5 years. So in essence, if you have, and I believe, and I've said this to many a time, I think Bitcoin's going to go up about 30% a year for the next 20 years. So if you have a long time horizon, you shouldn't take the 10%. You should take the 30%. But you have to have the stomach for the volatility. And most people don't want 30% with 30 vol. They want 10% with 10 vol or less vol. So we distill the yield, and then the last thing we do is we compress the duration. Your 5-year-old has to wait 30 years to get rich. That's difficult. Your 5-year-old gets money now forever. That's instant gratification. We're converting 120 months or 240 months of duration. A 30-year bond has 240 months of duration if you're an interest investor. We're stripping it down to 1 month. Pay me now. And so the way you do that is with a huge pool of equity capital. We have 60 to 70 billion dollars of equity capital a day, and then you embed the credit instrument into the equity capital. And that's what allows us to build this digital credit. And I'm going to talk about digital credit and digital equity, but with an aside. When gold was money, and gold was the commodity store of value in the world, the killer app for gold, it wasn't the gold. Cash settlement meant I moved gold from here to there. The killer app of gold was credit. The Rothschilds created gold-backed credit. The banks created credit. All currency was credit. All sovereign debt was credit. All corporate debt was gold-backed credit. All consumer debt was gold-backed credit. All mortgages were gold-backed credit. It used to be the world for hundreds of years ran on gold-backed credit. If we have digital gold, it's very logical that the world's going to run on digital gold-backed credit, or digital credit, if you will. And how do we get it? Well, if we've got an asset that outperforms the S&P index, we just strip off the amount of yield you want, and then the excess yield goes to the common stock shareholders. So the first digital credit instrument we created was STRK. We created it as a preferred stock. We pay an 8% dividend forever, and we give a conversion right into the common shares forever.
Michael Saylor just made an $835 million bet buying the Bitcoin dip. Right now, Bitcoin's fallen almost 40% off its October high, and the big money is buying the dip. What's your strategy? Now might be a great time to convert your IRA or 401k to Bitcoin with the help of Bit IRA. Plus, you can fund it with pre-tax funds, then continue to invest it over time as you do any other retirement accounts. Bit IRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and registered with the US government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Bitcoin has proven time and time again to rebound, every cycle going from a higher low to a higher high. With Strategy's latest purchase, Michael Saylor clearly believes Bitcoin is at a discount. Time for you to get in too. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin. When you're ready to build your complete business identity, you want to do it fast and right. With Northwest Registered Agent, you can build your business identity in just 10 clicks in 10 minutes. When you want more, start your business with Northwest. Everything you need to launch and protect your business all in one place. Your business identity isn't just your logo or website, it's everything that represents you, from what customers see to what they don't: legal filings, state licenses, secure domains, and compliance tools. Northwest gives you more privacy, more tools, and more guidance so you can focus on growing your dream. For nearly 30 years, Northwest has helped entrepreneurs like us build confidently. You can form your business for just $39 plus state fees, backed by real corporate guides, people who know your state's laws and have your back every step of the way. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks in 10 minutes. Visit www.northwestregisteredagent.com/paidJLD and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/paidJLD.
100-year call option, 100-year bond. We took it public and we put a shelf registration on it. So the innovations were preferred stock as credit, a public instrument, a happy name, strike. Sorry, Jack Mahlers. I like the name. So I took it. But you can still have it. STRK. And then we also backed it with digital capital, Bitcoin. And because it's perpetual, we could sell the instrument into the market any given day. So it's like taking the best ideas from an ETF and adding them to the best idea of a bond, the best idea of a common equity, and then putting digital behind it. And then after we did that, we thought, why don't we create a perpetual bond that pays 10% dividend yield forever? And we did that with Strife, STRF. You would never pay 10% in a bond to build a house or to build a data center because it's not going to last 100 years. How do you actually pay someone for 100 years? You have to have a use of proceeds that will last 100 years. So we borrow the money forever, and then we invest the money in Bitcoin forever. We're basically funding we're investing in the digital asset economy forever with money we borrowed forever. We're matching the duration. Because that's a senior instrument, it traded way above par, and the effective yield is 9%. And the idea is that's 9%, an investment grade bond is 4%. We had to pay a higher rate because we never intended to pay the money back, right? We're not giving you the money back in 5 years. We're giving you the money back in 5 million years. An investor would say, pay me more. And first we thought that was a bug. Oh, we have to pay more. And then we realized that's a feature, because I would rather pay 10% forever than 5% for 5 years. If you do the math in your head, if you got to repay the principal in 5 years, that's 20% a year plus 5, that's 25% financing versus 10. So if we'd rather pay 10%, who would rather collect 10%? The credit investor. So we created the best credit the credit became the product. This traded up. And after we did it, we thought, how could we pay people more? Because Bitcoin is going up more than 9% a year. Bitcoin's going up 29% a year. So how do you actually create a perpetual swap and pay somebody more than that forever without credit? And the way you do it is you do it with a non-cumulative junior preferred stock. We created the same version of the stock of Strife, but we stripped away the cumulative right and the governance provision, and it trades below par at 80. And that means that the effective yield is 12.5%. So there's a 3.5% credit spread between the senior instrument and the junior one. And what that means is, if you don't trust anybody in the world, you buy Bitcoin and you collect 30%. If you trust the company and you trust Bitcoin, but you don't want, if you have a short time horizon, you want cash flows, you would buy STRD and you would collect 12%, the first 12% of Bitcoin return forever. And everything above 12.5% goes to the common equity, to MSTR shareholders. And then if you semi-trust the company, if you kind of think Bitcoin's good and the company's good, but I want to make sure that it's very painful for them to ever skip a dividend, you buy STRF. The price to semi-trust us is you get 3.5% less yield. The value to trust us is 3.5%, and the value you get paid if you have a long time horizon. If you're willing to wait 10 years and take nothing for 10 years, you get paid 30%. And so that's three interesting things. We took the idea of Strife and then we did it in Europe. And we actually created a 100-euro par that pays 10% in euros for European investors. And we call that Stream.
What's the second best? There is no second best.